think we can start. Good morning and good afternoon, everyone. Thank you for joining today's Spark on the establishment of the digital euro, hosted by OGV in Austria. Welcome, Ismail.
Hello.
Just for your information, we have around 90 people registered for this Spark of today. So there might be people joining throughout your presentation. And before we start, like in every Spark that we will have a little Q&A session after Ismail's presentation. So you can ask him questions or give feedback or, raise some points afterwards. You might also write them in the chat. So as you know, digitalization has revolutionized money and payment systems worldwide. Today, we will get to know more about the development of the digital euro and its impacts on the cooperative banking sector. We are pleased to introduce you to Ismail Akbal, who is Regulatory Affairs Advisor at OGV in Austria. So maybe Ismail, before you start the presentation, maybe you would like to say some words about yourself, if you want to. So the floor is yours, and thank you for hosting.
Well, good morning, good afternoon, or good evening. This is actually what I always wanted to say. I don't know if we have members from the Far East now, but let's get over with. And so, as Brigitte already told, my name is Ismail Akbal, and I work for OGV, and I work for the Austrian Association of Volksbanken. And our work is about representing the interests of the Volksbanken sector on the European parquet, and it's about digitalization topics, financial markets topics, and also consumer policy related topics. So it's quite a comprehensive task, and we do whatever we can to do the best. Sorry. So we do what to the best of our abilities, what we can do for our members, of course. So we are also in a very fast changing environment nowadays, and regulatory burdens are getting more and more, and we have to cope with this reality, but we do whatever we can do. So far for my position as a regulatory advisor, and today's CIBP SPARK is my debut as a speaker, and thank you for this, Brigitte and Valeria, if you hear me, and having me here at this stage. So my task is to give you a glimpse of the developments in the ever-changing CBDC landscape. CBDC, as you might all know, is the acronym for Central Bank Digital Currencies. And we will talk about ECB's preparatory work on the prospective digital euro as part of a broader line of work by the global central banking community on the possible issuance of digital euro. Or central bank digital currencies in the wider perspective. So for the sake of time, I would say let's jump in and let's get started. So for the beginning of my presentation, I want to zoom out for context and go into the 2030 UNDGs, United Nations Development Goals, which was committed from all United Nations member states towards the implementation of this agenda. And one part of this agenda pertains to the creation of a digital public infrastructure, comprising digital IDs and CBDCs, which is our topic today, and also you probably heard of smart cities. Just to shed some light on the background work being done here, it's global network organizations like the World Economic Forum, and with its significant reach, or they're jumping in, pushing for this for the achievement of these goals, or the work being done by the Financial Stability Board as a worldwide coordinator of the international work of national financial authorities and the international standard setting bodies to promote the implementation of effective regulatory and supervisory policies, or also the work being done by the Basel Committee on Banking Supervision with its recommendations being developed on financial integrity. So all these players worldwide are contributing for the achievement of these goals, and it has to be seen as a tipping point of an ongoing evolution in terms of new forms of technologies and new forms of money. So this is for the context. You can think of, you probably heard of concepts of interoperable financial platforms, or tokenization of real world assets, unified ledgers with programmability features. And this all can be seen as a overhaul and upgrade of the whole of the whole settlement infrastructure worldwide. So this is on the horizon, and let's go further to the next slide. So explorations at an international level, this sector has seen remarkable advancements in recent years, with consumer needs evolving rapidly towards digital, instant, contactless payment solutions. For instance, when you look at Asia, in Asia, there was the pace of transformation when it comes to payments and money. It has been incredible. Or in different areas of the world, where we have also in Kenya, it's not a big scale infrastructure or ecosystem, but M-Pesa, of course, is a successful mobile phone based money transfer service installed by a telecom company for banked and unbanked people, and it was a successful project due to its unmatched convenience. In the mainstream, more known is probably the outcome of cryptocurrencies and also stable coins, which was assessed or evaluated by the policymakers that these kind of developments can have disruptive effects on our systems, on the financial trading, on the financial traditional financial systems, and therefore the idea of central bank digital currencies emerged. And the pace increased rapidly in the last 3 to 5 years. And now we have almost over 130 countries that are looking into this. Either it's on the research and the pilot, or even in the launch phase. So to give you a snapshot, I have prepared a CBDC track on the next slide. And here you can see all the different CBDC projects around the globe. And I want to pick out some economies, some countries. Like China is in an advanced pilot, of course, as you probably might know. It is already completed its first cross-border crude oil settlement, for instance, with the digital yuan. And this is also being regarded from the Atlantic Council, which is a think tank and also a leading body in this segment, is also being described as a step of the much discussed de-dollarization trends around the world. So this is happening right now. And then let's go to the Euro area, or in India and UK. They're at the forefront in this developments. If you look overseas to the US, or let's say, or also for our Brazilian members, the Brazilian central bankers are investigating on wholesale CBDCs, but they are actually astonishingly behind us, since actually Europe is more a regulating continent, and the other ones are being seen as a more innovative systems. But in this case, Europe is at the forefront. And also, if you take CBDC projects that have been launched in Jamaica and in Nigeria, for instance, there has been CBDCs already, or there has already been the launch of CBDCs, but these in these economies, they have seen pretty frictions when it comes to customer adoption, because if you take Nigeria, for instance, it has the highest usage of Bitcoin, and people there are reluctant on adopting the CBDCs there. So there are quite some trade-offs for adoption, but another point I want to say is that in Kenya and Ecuador, the two red countries on the map indicated that these are CBDC projects that have already been cancelled. So let's see what the developments in this area might be in the future, in the foreseeable future. And I want to move on to the next slide. So what are the reasons for the issuance of central bank digital currencies? As I've explained, the growing adoption of cryptocurrencies and stable coins with their potential disruptive effects, or the entry of big techs into the financial services space, and also with non-banks like Apple, Google Pay, as you already know probably, and also the phenomenon of the decline of cash as a payment instrument. All these kind of developments have brought the central banks together and developing an argument to say that these phenomena can weaken the effectiveness of monetary policy and also decrease the people's confidence in traditional financial systems. So therefore, they needed to mitigate those risks and went over to their agenda. One central bank that I want to highlight here is the Central Bank of Sweden, which plays a unique role in this matter, since it has it has a different argumentation. It says that the physical monetary anchor function of nowadays public money it remains unchallenged by private initiatives, private digital money, and therefore, in last year, the Riksbank, the Swedish bank, delayed the introduction of the electronic krona, emphasizing an insufficient social need. So, even though in Sweden we have where physical cash payments just represent less than 10% of all retail payments transactions. So this is quite significant if you ask me. So I wanted to highlight the standpoint from the Swedish National Bank. So going on to the next slide. First, we need to understand which kind of forms of money are existent. So there, from a legal and economic standpoint, we have to distinguish between central bank money, which consists of cash, and also of reserves that are accounts from banks that are held at the central bank. And cash, central bank money, is a liability from the central bank towards their holders, and is also bestowed on with legal tender status. Whereas commercial bank money is consisting of deposits held at commercial banks and is to be seen as private money. And these deposits are direct liabilities from the commercial banks towards their holders. And private money also doesn't have the legal tender status. So when it comes to these concepts of money, there is pretty much an elephant in the room between the central bankers and the commercial bankers. Private institutions see themselves competing with public money, and every time you go to an ATM, you convert your deposit into cash, and you take it away from the bank's balance sheet, and it converts to central bank money, and it is on the liability side of the ECB's ledger, but you can't see it, but it's there. So you have this actually this kind of competition between these players, and this trend is the trend is continuing to according to the European Commission. The trend continues that the use of private money is increasing while the usage of central bank money is declining, and therefore the European Commission fears that the only form of central bank money is money that functions both as legal tender and as a monetary anchor will gradually disappear rooting from this development. So this is actually the problem, as I would say. And now they're thinking of CBDCs. If we go to the next slide, the Bank of International Settlements. Before I answer the question, what is a central bank digital currency? I want to shed some light on the BIS, as it was established in 1930 after World War I, and was established as the agency to handle reparation payments due to World War I, and its role changed over the years to serve as a center for economic and monetary research and consultation, although it has no democratic legitimation, which makes its activities the more controversial. Around 60 member central banks are adhering to what it is recommending, and this has also big ramifications for the whole financial world, of course. What is also jaw-dropping and mind-boggling are statements from the general manager from the Bank of International Settlements. It's Augustin Carstens, to name him. And he said his statements were like the total controllability of CBDCs compared to nowadays forms of money, which is actually concerning to me, but this is how things are being seen from BIS's perspective. So to jump into the definition, the Bank for International Settlements defines the CBDC as a digital payment instrument denominated in the unit of account, in the national unit of account, and that is a direct liability of the central bank. So essentially, a CBDC is the digital form of nowadays central bank money. It can be used as a store of value or as a means of payment, and it can have legal tender status. So this is actually the basics, how to define a CBDC. Of course, there are different variants of the CBDC, but this depending on each jurisdiction's provisions, of course. Let's go further. Coming back to European terrain, the Euro system, comprising of the European Central Bank and the national central banks within the Euro system, within the Euro area, they decided to launch a 2-year investigation phase in mid-June, in mid-2020, to examine the design, the features, advantages or potential consequences of issuing a digital euro. And last year, exactly 1 year ago, the European Commission published its draft proposal on the establishment of the digital euro, which was very fast. We were a bit surprised that it was that quickly being published. And the work from the ECB being done parallelly concluded its investigation phase in November 2023, and they concluded the investigation phase and launched the preparation phase. So quite a pace, if you ask me again. And the digital euro regulation should be finalized by next year. Let's see. Now we had the European elections so the new parliament will decide on how to move forward, and we are also tracking this very closely, of course. So the digital euro regulation establishes the digital euro, and after its adoption, the ECB can decide whether to issue the digital euro at all, in what amounts, meaning how many percent of the money in circulation it will make up, and also at what time, and what are about the specific measures that are intrinsically connected to the issuance of a digital euro. I will come to this in the upcoming slides. And to give you an impression of what are the policy goals of the European Commission by establishing the digital euro as a single currency, they want to ensure that the central bank money with the status of legal tender remains available to the general public. They want to promote a state-of-the-art and cost-efficient payment means, and also ensuring a high level of privacy in digital payments. What I want to say here is that digital euro payment shall be possible online and offline. Offline meaning P2P, without the intermediation of any bank. with different levels of privacy. This is actually not carved into stone. There is very much discussion points that we have to clear still, but this is how it's being seen for the time being. And they're also quite something that is being brought up into discussion is also the use of retail CBDCs implies that the user leaves behind a digital footprint, raising questions raising questions and issues relating to the data governance and to the privacy of the digital euro, which is why it is often being subject to criticism. So this high level of privacy will be a big thing in this whole project. Then maintain financial stability. I will come up to this in the few slides. It's regarding holding limits and remuneration of digital euro holdings. And also they want to promote financial inclusion. This is also in Europe seen very critically among experts, since the coverage of banked people in Europe is pretty high. We have a coverage of 98.5% of the population is banked, and the remainder either does not want to have a bank account for various reasons or is not capable to do so. So the inclusive character of the digital euro in Europe is being challenged among experts. Going further, according to the European Commission, as also outlined in its proposal, the establishment of the digital euro is necessary to supplement and adapt the official forms of currency to technological developments, so that the digital euro can be used as a single currency in a uniform and effective manner across the euro area. As such, the digital euro will facilitate the development of a pan-European retail payment solution. This is quite significant, since this approach is, in our mind, not covered by the European Union's treaties, for which the ECB would exceed their mandate. However, they are proceeding and not willing to listen to the stakeholders, but this is how the things work here. We have quite a mighty player here in the opposite, and they are actually directing how things are going to be made. So quite concerning, of course. As said, the digital euro shall be a direct liability of the ECB. The ECB can authorize entities to issue or can issue itself the digital euro, and it shall be convertible at par. Moving on to the next slide, one key element is also the legal tender status of the digital euro. Since it shall be granted legal tender status, that means it cannot be generally refused by a PE in a settlement of a debt that's denominated in the same currency. That means mandatory acceptance. And what is also quite concerning is that the digital euro, the PE shall be prohibited to unilaterally exclude the acceptance of digital euro via contractual terms, meaning not individually negotiated terms are void, are not applicable. So therefore, this is quite significant, since in many or in some member states within the European Union, and Austria as a heavy cash country is also one of them, the status of legal tender doesn't entail the consequence of having to accept everything under all circumstances. So cash can also be excluded in terms and conditions in Austria, which is why it remains to be seen how the member states will react to this kind of provision, if they will give up on their sovereignty in this matter, since it is a very sensitive matter. So this is one key issue. The next key issue is on the next slide. It's regarding the distribution of the digital euro. And the digital euro payment services may be provided by authorized PSPs located in the European Economic Area. This is quite new, since PSPs were actually not able to access digital cash or banknotes. There are it was actually constrained to banks, limited to banks. And now these PSPs shall have access, but are not obliged to distribute it. But the banks, the credit institutions, shall be obliged. So we have to perform these tasks and provide these basic payment services upon the request of our clients. And this is quite in comparison to the PSPs. This has to be seen against the backdrop of a level playing field. But this is, in the eyes of the policymakers, not a problem for the time being. So let's see how this will work out in the discussions, in the upcoming discussions. And what we also see that what is also being proposed by the Commission is that natural persons that do not hold or do not wish to hold a non-digital euro payment account, these member states shall designate authorities, entities like local authorities or post office Giro institutions for the provision of these basic digital euro payments. And you see, there is the European Commission tries to get these people onboarded, even if they don't have a bank account. But it's a narrative being generated, created, like the trust in states is bigger than in private sector. I don't know. Let's see how this will work out. But banks are, to say the least, are here now obliged to distribute the digital euro. And also, I have prepared a figure from an expert opinion that we obtained from a German professor. He outlined the benefits, costs, and risks. And here you can see the different the distribution of roles between the intermediaries and the euro system, which is very precarious. If you take a look at what the banks will have to will have to do, will have to perform for digital euro purposes, and this will have to be done on a free basis without any compensation. So it's quite going going quite how you say, it's quite adverse to our position, since we don't we have to borne all these costs, in the costs like creating an account, including KYC checks, AML, CFT, maintaining the accounts. This will have to be done without fair compensation, and this is actually or apparently adverse to our position. So let's see how this will look in the end, but this is how it's envisaged from the European Commission. Another crucial element of the EC's proposal is with regard to the limits to the use of the digital euro as a store of value. So we say the digital euro cannot be a store of value, since it bears risks for financial stability. And the ECB, it's also not quite clear in the legal text. Is the ECB does the ECB have to develop such instruments to limit the use of digital euro, or with their own defined parameters, or don't they have to? So this is also quite a big issue. And what is also being clarified for the time being is that the digital euro shall not bear interest. In any case, from ECB's standpoint, there is a bit of a dilemma, since increasing demand for central bank money and maintaining financial stability includes an inherent trade-off. And as it simultaneously, you have to strengthen the monetary anchor role by having a good by having a demand, more demand is having a demand, and also on the other hand, you have to limit this demand to avoid hurting the financial stability. So this is quite a tricky issue, and we will see how this will work out. But we say, in any case, it should be made clear that the return on equity will decrease the higher the holding limit is, for which the impact of the digital euro on the bank's profitability is more significant, and meaning that the digital euro can reduce the liquidity situation of commercial banks, regional banks, the interest income, and also highly likely affect the credit provision, which is very concerning to say the least. Then the ECB has, for this reason, the ECB has created or invented a new waterfall mechanism in order to satisfy different stakeholder groups, since consumer associations were asking for higher limits, banks are asking for lower limits. And now there was this idea of introducing waterfall mechanism. Waterfall mechanism meaning waterfall if the money being held on the digital euro account is higher than the threshold, then it's automatically converting the amount of the digital euro that exceeds this threshold to private money in a linked liquidity source. And in the reverse waterfall, if you want to purchase a good or a service and the money on your digital euro account is not sufficient, then you can it will be automatically converted from your private money account to the digital euro account, so that you're able to buy the service or good you're aiming for. Therefore, the limit, there is also, I haven't said this for now, but there is a very high limit envisaged by the policymakers of 3,000 euros. But this appears to be extremely high, since if you have a waterfall mechanism, this actually, if sufficient, if you have a low holding limit, it will be enough that you can have a 100 euro limit. And if you need more, then due to the waterfall mechanism, you will be able to buy the goods you want. So let's see how the limit will work out. But we are assuming that this 3,000 euro is very tenacious in the discussions, and it will come like 3,000 euros, which is actually disturbing, as we have also conducted modeling exercises which show the outflows, the impact on deposit outflows. And if you take 3,000, our modeling exercises showcase that it can get very critical for the liquidity situation of the bank. So the last key element that I want to present is regarding the limits on fees and charges that we can obtain from performing the digital euro payments. So the use of digital euro as legal tender means of payment shall be preserved by limiting the level of fees and charges that natural persons must pay to PSPs, or that merchants must pay to PSPs, or that PSPs must pay each other. So this will be kept. The methodology for it, the methodology laid down in the proposal is not cost covering, for which we are advocating for rethinking of this methodology, because from a legal point of view, it is also questionable if the European Commission can force commercial banks to perform public functions without receiving any compensation, since this equals the internalization of banks' infrastructures, and we don't see any reason that justifies this approach. So we see here clear violation of the right to conduct the business, the freedom of contract, also that this pricing regulation should be withheld or drawn back, and the pricing should be market driven to stimulate competition, and should not be centrally planned from a few actors, which is also a stark contrast to regional banks' decentralized nature. So there are many implications also for our business models. And also the last bullet point on this slide, that PSPs must not charge any inter PSPs for PSP fees for the provision of funding and defunding services, meaning that if we have a wallet provider and you have your own bank account and you want to fund your wallet, digital euro wallet from held at a third party, your bank, in this case, it's our banks that would have to perform this task. We would have to fund the wallet and would not receive any compensation for it. And it is really astonishing that this kind of business models are being envisaged, and we are trying to fight this, of course, the best way we can. But let's see how this will work out. We are still not in the end. So we're coming to the end of the presentation, and our key findings on the on the Commission's proposal are that the entry of the ECB into payment markets equals a paradigm shift. It's like the regulator, now the umpire, the referee steps into the field and now wants to score goals himself. And this is apparently not desirable, and there need to be clearly allocated roles and responsibilities. Thank you. So this is what we found, and we also don't see any immediate added value that could justify this expensive project and implementation. Therefore, we say the EC, the Commission, and the European Central Bank should refrain from introducing the digital euro at this stage, since we have also market-driven initiatives. Maybe some of you heard of the European payment initiatives, also being developed by our German colleagues from DZ Bank, with the Vero wallets. As far as I've heard, they are going to launch next week. So this should be probably the way before we move to a centrally planned regulatory-driven framework. This is what we advocate for, of course, at least. The proposal as a whole is to be seen that banks are being degraded to quasi-public entities. Like we have also seen this in the COVID pandemic, where banks stepped up to their responsibility and gave credit with moratoria. So we have to shoulder all these burdens, and we have done it to the best we can, and it was a successful way. But the way we are moving forward is more and more internalization of our infrastructure for public purposes. But that was not the intention of our companies when they were established. So we have a social impact, of course, but we are not state-driven entities. So therefore, this needs to be also taken into account. And regarding our general recommendations, the digital euro, if launched, it should be only used as a means of payment. So a creation of a cash like CBDC, meaning an electronic form of nowadays banknotes, is desirable, and leaving it as a raw material so that the market can innovate on this. So it is not a question if, but it will, the question of when will the digital euro come. And we have outlined that the use cases in the proposal are just a mere copy of the existing private payment services landscape, and therefore it has not that added value that should be there in view of the scale of the project. Yeah. So otherwise you have a mismatch from the cost benefit. It's not worth to have such high costs for this kind of low benefits. The necessity of holding limits is crucial for us, of course. The low holding limit, since deposit outflows can affect our liquidity situation, which could if our deposits that are safe and cheap funding source, if they are going out of our balance sheets, we will have to look for ways to refinance ourselves, and this could come up more expensive, and this will also affect the credit provision and in the next step also the European economy. So we are saying this because we don't want to have any unintended consequences like crowding out private initiatives, and in the worst case also maybe leading to the demise of smaller regional banks. And this is actually very very concerning, let's say this way, as I said, and we are also thinking of how to move forward. So the concerns and challenges that arise from the introduction of a digital euro need to be thoroughly thought of. But for the time being, it is not possible to have any possible. It's not possible to identify any responses, such as adjusting our business models, since we don't know how the framework will look like in the end. But potential benefits outlined, like atomic settlement, that also has the consequence of no clearing, no netting, lowering counterparty risks, capital savings, more liquidity, is worth striving for and sound good to us. But it is safe to assume that the Digital Euro project will, if not designed properly, will be incapable of reaching its or accomplishing its objectives. And we need to say, with challenge there comes opportunity, but regional banks need to stay vigilant so not to miss boarding the train. And with this in mind, I'm finished. I hope that I could contribute something for your work, or had some thought-provoking assertions in my presentation, and that you can use it for your own purposes, of course. So yeah, thank you.
Thank you so much.
Thank you, dear Ismail. It was very interesting and very detailed, and also sharing your contact details, which I will send everyone an email later with this presentation for you to have a look again. And if you have questions to Ismail, he's open to answer your questions or have an exchange with you. My question now is does anybody have a question regarding this presentation? There was a lot of information, Ismail. And so does anybody have a question or would like to give feedback what is going on in your country? Because we have also here visitors from non-European visitors here. So please, go ahead, ask Ismail. Anybody?
Yeah, it was quite an avalanche of information. It's not that easy to comprehend, but yeah, we will see this more and more in the mainstream, and we will have to adapt to the new ecosystems, of course, and our roles and responsibilities will change, and we will have to look if we want to survive. And actually, I was more pessimistic in the beginning of all this process 3 years ago, but now you have to cope with this, and you have to come up with any responses to stay competitive and to survive as well. So this will occupy us in the foreseeable future.
If I may I ask you something? Thanks for excellent demonstration of what the digital euro actually means. There's one argument being brought forward by the ECB, which is when it comes to the waterfall and liquidity which may be flown out from banks' balance sheets, that okay, it may be a one-time effect because people may transfer their deposits into a 500 digital euro wallet or whatever. But if this money is then being used, including the waterfall, this is something which would already be flowing out of the deposits of a customer's account because he's purchasing something. So actually, it's just one time the 500 euro, if that is the limit, or 3,000 euro. But aside from that, it's just normal money he would either way use for buying a car or whatever. So it shouldn't make it too huge a difference for the banks. Again, except for the one-time effect. What do you say about that argument? Because I find it difficult to really say something which turns that upside down. It is, I think, true that the heaviest impact is the first time money is being transferred to a digital euro wallet. Aside from that, it shouldn't make too much of a difference.
I mean, this is not something we can anticipate. We have no data on the customer behavior, of course, here. And it's also, if you think of GDP per capita in the euro area, it's the average wage should be around, I'd say 2,000 or even lower, yeah. And I don't think we also don't think that that the needs of a customer will be conducted via the digital euro account. It would be still conducted via its private bank account. But we fear that we have also seen in the parliamentarian discussion from the Social Democrat side that the deposit guarantee scheme is being questioned because of the future outlook of a digital euro that is a risk-free CBDC. So there is no credit risk for any of the customers. And in distress times, when we have seen it I mean, the Silicon Valley Bank is not a retail bank, but you can see with the digitalization, with one click, you can take all your holdings and withdraw to another account, maybe a central bank account, whatever, that is being with the narrative, with the sentiment being created that it's risk-free and you can shift all your money and there is no risk for you. So this narrative could exacerbate our liquidity situation. And therefore, I don't see just the one-off effect. I would say that also climate-related concerns could be taken as a narrative here to say is with central bank money you could purchase goods for less money, for instance, or you can get your tax refunds faster. So for the time being, it's maybe right, but in the future, all these things can happen, I think. So there are unknown unknowns, and we have to prepare for this.
Thank you.
Thank you.
Ismail, there is also a question in the chat. I don't know if you have access to the chat by Fernando. If you mind reading it and...
Yeah, just a second.
Yes.
Suggesting something. So concentrating only the new currency in Europe and the US. I mean, I'm sorry, I don't get it totally, but there is what I can say about the BRICS. It's nothing new in this in the discussion, but yes, I mean the de-dollarization can occur, and we will see if there will be one global currency in the foreseeable future in 10 years. But the way I assume it's going to work out is that there will be more currencies that could have a global a global a global network or global how do you say Bedeutung habe ich jetzt vergessen.
Significance.
Yeah, thank you. Yeah, a global significance, but I don't see one currency like the BRICS coming up. I see more fragmented economies with their own currencies. But nobody can say how things will work out. Yeah, so maybe you can ask another question so to concretize your question, please. Thank you.
Ismail, in the meantime, I would like to ask you two quick questions. I don't know if they're quick, but two questions. One question is, can you give a rough timeline as of today regarding the introduction of the digital euro? What do we
Yes.
know as of today? It might change, of course, over the next months. And my second question was, it's more personal. I would like to know from you as an employee and also an expert in this topic, where do you see the biggest risk or risks in implementing this digital currency at the moment?
So regarding the timeline, it's an easier question, or not easy, but it's indicated that it will launch from, so the regulation will be finalized around 25, 26, and with an implementation phase of 18 to 24 months. So it is indicated to start from 2028 on. It can also be postponed. Let's see how the discussion in the new parliament and the newly composed parliament will evolve, and with the rights a bit on the rise, and but the centrists have actually maintained their dominance within the European Parliament. But it's still not. You cannot anticipate this. But 2028 is actually something you can take for given. And regarding the second question was the biggest issue in implementing. Yeah, the biggest issue in implementing is there are many factors, but I would say one factor that is important to the decentralized nature of regional banks, of our structures, is that we are going more and more towards a centralized economy. Things being from a top-down approach, and we have the bottom-up approach. So this kind of development will hinder our business models in a way, but how or which point will be the most significant, I cannot identify it for now. But as I said, the most important thing is to think ahead and stay vigilant, so not to miss the train, because the ecosystem and also DZ Bank plays a pioneer role in this, with this commercial bank money token and its blockchain solutions being in the room. These are the kind of adaptations that we should look for and to stay competitive. Yeah, but in the end, I can't say which point will be the most significant. I couldn't answer it to the complete satisfaction, but yeah.
No, it's fine. Thank you, Ismail. I got the point. Thank you. Is there anybody else who has a question or remark? I think, Ismail, you should do another Spark next year to give an update of today's Sparks, to see what the development is, in a year from now. But I think there's a question, Fatima?
Yes, hi everyone. It's not actually a question. I would like first to thank Ismail for this relevant presentation, even if I didn't react that much, just because the subject is certainly very interesting and very current in our global context. That said, it has somewhat high technicality as far as I'm concerned, because I'm not that involved in such area. So I suggest perhaps for the next Spark, just to, it's our responsibility as ambassador to pay more attention to the topic and to get involved, perhaps other person in our organization who can be more knowledgeable about the topic, to have better interactivity, and to invite him to take part of this conversation, to have more value to add better than us. I'm talking about myself because I'm in HR area. I got some words here and there. I know in general what it is talking about, but I'm not able to have interest in ideas or interest in a question to ask. So perhaps the next time I will invite someone else. Yes, to be more interactive with you. But that said, thank you very much, because I felt that it is very, very interesting topic.
Happy to contribute if it's desired, yes. And it's also for me, also I get an added value if I see the perspective maybe from other people. It can also help for our work. Yeah. Thank you.
And also, Fatima, feel free to forward this person Ismail's presentation. I will forward this. So please feel free. And if he wants to have an exchange, we have the contact info right here. So
yeah, feel free to approach if you want to.
Okay, thank you so much.
Thank you as well.
So I think if nobody else has a question, we're already more than 33 minutes into it. I thank you all for participating. Thank you so much, Ismail, for this very important topic, for easing this a bit for us, for making this more accessible. And as I said, maybe I will approach you next year again to do an update. So
I know it's a complex topic.
Yes.
It's always for me also a task to bring it to the point, but it's not easy. Yeah, it's very comprehensive, and it needs knowledge from each discipline. It's from every discipline. It's very all-rounded topic. Yeah.
Yes, and it touches a lot of facets, a lot of aspects. So it's have a big task at hand. So yeah. Anyway.
Yes, money is good, but it's always complex.
Yes. With that being said, thank you so much, Fatima, for your last words. I think it's a good way to round this Spark up of today. I wish you all a good rest of the morning and a good afternoon. I will distribute the presentation of Ismail, and thank you so much, Ismail, for your time and for your expertise. And I hope to see you again soon for the next Spark.
I thank you.
Have a good day.
Thank you very much.
Bye, everyone. Thank you.
Have a good day.
Bye. Thank you for joining. Bye.